searching for here is a great company with shares that might get tossed around by market volatility, even as you believe they'll ultimately go higher if you're patient. Now, if you were just investing, then you just have a position in the stock, buying in gradual increments, because we all know that buying all at once is just pure arrogance, and that'd be it. By the way, this whole process of buying in is something that we're constantly showing you how to do if you belong to this CBC Investing Club. We also talk about trading around positions. Take something like NVIDIA. It's a chip maker with a fantastic long-term story because they make the most powerful semiconductors on Earth that we need for cutting-edge applications like artificial intelligence. I love NVIDIA for the long haul, but it's got an insanely volatile stock. Now, let's say you want to own 100 shares of NVIDIA over time. Then the way to set a position would be buy 25 shares 4 times over a period of weeks or even months. And that's your core position as an investor. But let's say you want to trade, something that's hard to do, but also cheaper than it's ever been. Because home gamers can now fit in, can fit in and fit out, and no stock commissions. Now, I wouldn't recommend pure trading something like NVIDIA. My stance is own it, don't trade it. But trading around a core position, different story. So let's go back. You own the 100 shares of NVIDIA, and let's assume it's sitting at, I don't know, how about $50, $500 for the purpose of it. It's $500. Every time the stock jumps another 5%, you could sell 25 shares, a quarter of your position. You shave a little off to bring in some profits. So once NVIDIA hits 525, you own 75 shares. Keep scaling out the same way on the way up, but don't ever sell the final 25 because that is your core position. Then you wait until something happens to knock the stock back down, and as long as nothing's changed with the underlying thesis, you use that weakness to stock up a little more NVIDIA. We've done this for the Chop Trust. It's going to happen pretty often because, see, since we're in a world where stocks can get crushed by all kinds of factors, nothing to do with fundamentals, that's what happens. Now, as the stock comes down the original cost basis, you buy it back in increments. Since we started with 100 shares, let's keep using increments of 25 to buy it back on every 5% decline. You can go beyond 100 shares if it comes down low enough too. Now, this might appear to be small potatoes, up 5%, sell 25 shares, down where you started by 25 shares, and repeat the process on the way back up. But over time, your profits will add up. And that's what trading around a core position is all about. Now, a lot of people think trading is incredibly exciting, and it can be. But if you're good at trading around a core position, you should be pretty bored. Right. All you're really doing is watching the stock move and then trimming or adding your position accordingly. Contrary to the image of trading is something that's reckless and irresponsible, trading around a core position is really the height of prudent portfolio adjustment. Boring, by the way, is good in this business. Exciting? Save it for the stadium. Obviously, you can scale these numbers depending on how big your position is, but the basic idea is avoid putting yourself in a spot where you have too much on the table in case the stock gets squatted down, or too little on the table to take advantage of any upside that comes your way. Trading around a core position is an important basic strategy that everyone can use, even those of you who find the notion of trading totally abhorrent, because it's less trading and more just a supplement to investing. So here's the bottom line. Now you know the basics of how to trade around a core position. Yet another method to my madness, one that allows you to generate lots of small gains that I am telling you will add up over time. Mad Money is back after the break.
Coming up, Kramer's revealed his tools to the trade of buying a stock. But what about selling them?
Like and subscribe, y'all.
At the right time.
Like and subscribe. This is what my Friday's like after trading. This is what a day of trading is like. After the trade, stock market news. This is one of my mentors.
Thank you for all your advice.
Like and subscribe, guys.
Your advice let me quit a job that I hated. I love you to death. Thank you for everything you do. Thanks for making us money. More importantly, thanks for keeping us from losing money.
CNBC Sports on the record. Your front row seat to sports and business. From commissioners and owners to media executives and top athletes.
These are Rembrandts. I'm telling you, these franchises.
On the record. All new tomorrow, 3 Eastern.
Desert diamonds celebrate all that you are and all that you're still becoming, in natural colors that reflect all the shades of you.
Down, up, right, left, inside, out. Sometimes it's hard to make sense from nonsense. Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
Need your investments to work harder? Options can offer much higher returns than stocks, cost less, and help reduce risk. Look at this stock versus options trade on the same security over the same period of time. The stock return can't even compare. That's why in today's market, trading stocks alone
Like and subscribe,
it's not
like and
an
subscribe,
option.
guys.
Learn our
Like and
beginner-friendly
subscribe,
strategies
like
in
and
our
subscribe.
new book. Get your free copy today at itsnotanoption.com. That's itsnotanoption.com.
You can get this fixed now and pay later. You can get this fixed now and pay later. And this. Get it fixed now and pay later in 4 interest-free payments at SafeLight.com.
Safe Light Repair, Safe Light Replace.
Investing in your goals can feel out of reach. I've been there. But instead of giving up, I found my edge. I'm saving up for the sofa.
Like and subscribe, Santorio Hector, Stock Market Savage, Cleveland record producer, cannabis grower and breeder. Like and subscribe. This is what a weekday for me is like. After I finish trading, I take in some market news, especially when the market is going crazy and as volatile as it is right now. I need everybody to subscribe. I will be giving away personally $1,000. We will be selecting 10 people will be randomly selected when we hit 1,000 subscribers, and I'm going to personally give 10 people randomly selected a $100 monetary gift. And this will be, to show those that subscribe to the channel, that like the videos, and that support the channel, that I will always give back to, my community. And those that follow and support the channel and support Santorio Hector, Stock Market Savage. On my patio balcony, look at the beautiful Cleveland's night skyline. Look like the Simpsons. Look at inside my apartment from outside my apartment on the patio balcony. We're on the patio balcony.
You know what, the phone still works down here. It's crazy.
Bro, like in 2019, when in 2019, I was like terminated from a job because I found lead in this lady's apartment. And they thought I was gonna blow the whistle on them, like they fired me. It took me a minute to get my unemployment because they was trying to say that they fired me justly. It was like the same situation that just happened to me at this property, and I hit them with a lawsuit and I won, just like the same thing that happened with this company. A supervisor fired me on some discrimination shit. He was already trying to harass me. And I was really just trying to be humble because I really just didn't want to get on no street shit because I'm really from the streets. And I was just happy to have a job. It was, and be able to be changing my life. I was taking part of my paycheck every time I got paid, investing it into the market, part-time trading, running up a bag. I started trading last year in July, early July, with less than $200 in the account. Started trading stock options contracts. Taught myself how to trade stock options contracts last July. By April of this year, we had an $83,000 portfolio before the little mini crash in April. And I'm just on a mission trying to build $1 million portfolio, trying to get $1 million out the stock market, promote my music business, my record company, and my music publishing company. I put artists out. We have artists featured on the albums from New York to California, Texas, the Bay Area, Sacramento, Atlanta, West Virginia, different places, Cleveland. And so, This is what I do. I'm a full-time trader now. I was working, making $23 an hour, working 8 hours a day, making $23 an hour. One consistent year of investing and trading stock options contract set me free from a 9 to 5.
Have already bought. They come out of nowhere, attracting more and more attention, more and more backers, and eventually everyone who wants a piece of this stock has a piece of it already. When that happens, the run's over. It's time to go home. Oh, and if
I see Janam.
Take advantage of their enthusiasm.
I see Janam Ari in the live.
That's a great sign.
I see Roxy in the live. What's up, Roxy?
Stock up so much before they run out.
I see.
Of course, there are other situations where speculative stocks go.
I see Joshua.
Regardless of how much attention.
I see Joshua Deland. I see Dylan. Joshua Dylan.
Same goes for enterprise.
That's what's up, man. Like and subscribe. Like and subscribe. Like and subscribe. Like and subscribe.
There was a lot of liquidity kicking around back then, and it had to go somewhere, which is why so many money-losing companies had red-hot stocks. But then the Federal Reserve declared war on inflation.
This is my teacher. That's my teacher right here. If you really want to learn how to invest, go join the CNBC Investing Club, of which I am an on and off, sometimes on, sometimes off member. Sometimes I fall back from the club because I just want to, go at it alone to see if I'm learning, and to see if I can handle the market without always having to lean back on Kramer's advice to see if I'm learning what he's actually teaching me.
You need to watch how many analysts are following these little
CNBC Investing Club. Join.
Something like that. But for the travel trust that you can follow along with at home,
I want y'all to tap into the CNBC Investing Club.
It's donated to charity at the end of the year.
Yeah, look, I think I've always felt from Real Money, my first book about investing, that never fear the tax man, fear the losses. All right, next up, we're taking a question from Russell, who asks, I always try to follow your advice to buy stocks in portions rather than all at once. Often these stocks never pull back enough to buy more. I end up with small positions in lots of different stocks, making it hard to manage. What would you recommend? Okay, this is another one where this is a discipline that I came up with, which says that it's a way to figure out whether you missed the move or not. Like if you come in and the stock keeps going up, there's no doubt about it that you are late. There's just nothing you can if you don't get it all in. I've accepted that consequence. If I'm late, then all I do is I have a small gain. That's just the way I look at it.
Yeah, it's a high quality problem to have. If you're able to continue to do the homework, then you can still hold them, especially if the prospects are quite good. But yeah, it's a challenge because you don't want to spread yourself too thin with a whole different number of stocks. But look, if they're going higher, it's a quality issue that we deal with sometimes.
It's a discipline. I mean, what happens if you buy it all at once and it goes down? It's a good chance that could happen, and we're trying to avoid that. That's the real worry. All right, now let's take a question from Randy in Ohio, who asks, I know that when bonds sell off, the rate goes up. If bonds do sell off, why would it impact stocks? Okay, there are many different ways you can answer this. One is that if interest rates go up for something that is risk-free, a bond, then that has greater appeal than a dividend, which may be equal because the dividend, well, you know what? That's only part of the equation when a stock returns. And if the stock goes down big, then you wipe out whatever gain you get from the dividend. And then, of course, there's long-term considerations, as you know, about just about the value of a bond versus stock further out.
Right, it's competition for dollars, like you mentioned, but interest rates are also used in a discounted cash flow model where investors, they look at the cash flows out, they estimate them, they discount them back, and when the interest rate's higher, they get discounted at a higher rate. That lowers the present value, that lowers the value of stocks. But there's also things like financing costs. If it's used, if a company relies on financing to sell their products, higher rates might hurt their business as well.
You just have to just think stocks are as competitive in many different ways than bonds if rates go up. I mean, that's the way you have to look at it. Even if you don't finally actually understand discounted cash flows, you kind of have to take it for granted that that's what occurs. Next, Lynn in Virginia wants to know, if I only have 5 shares or something remaining and you recommend taking some profits, should I close out the position or let it ride? These are just questions that are so hard because, 5 shares reminds me of like the tail end of when we had some wind. It's like a tail end.
Yeah.
And what do? And the 5 shares is really so that if the stock goes down, you can buy more. So if the stock goes up and we recommend sell, I would just get rid of it. I really would. I would just say, let's move on and find something better. Because there's always something better.
No, it's absolutely a fair debate. If they are growing the dividend, growing profits, the outlooks are bright. Maybe you could sell 1 or 2, but you also don't want to fall into that trap from the earlier question that we just had about managing too many positions. So there's always cross disciplines happening right now.
And that's one of the things that people don't understand about investing, is that there is no right and wrong. There's often 2 rights that compete against each other. Now I have a question from Kyle.
Join the CNBC Investing Club. Like and subscribe to the channel. Start liking and hitting that like button when you pop in. Like and subscribe. And especially subscribe, because at 1,000 subscribers, I will be giving $100 to 10 people randomly selected for a total of a $1,000 giveaway back to those who support the channel. Santorio Hector, go stream the albums on all music platforms. Download, stream, Apple, Spotify, Boomplay in Africa. You know what I mean? Tap into the records featuring artists from New York to California. Learn to invest. You gotta invest to set yourself free. Make yourself take a portion of every paycheck and invest into the market.
In the market than necessarily trying to time it oversold, overbought. You just want